Hi, everyone. Welcome to Coffee Chat with Castle Hill. Today I'm joined by Kevin Alakani, who's the CEO and founder of Compliance.ai. And so, Kevin, thanks for joining. I really appreciate you giving us the time this morning. I know it's early for you. We're going to talk a little bit about the application of AI and machine learning in regulatory change management. But maybe before we jump in, can you just give a little bit of background and especially about the software product and the whys and wheres?
Absolutely. Yeah. We are Compliance.ai, helping compliance risk and general counsel at regulated organizations, specifically within the banking, financial services, and insurance sector, to be able to respond, react, report, and track regulatory changes on a scalable basis and be able to really lower the costs normally associated with regulatory compliance and regulatory change management.
So that's a great segue. Appreciate it. So how do you lower the cost? Because it is 5 6 years ago. I know this was a very expensive proposition for most firms. Between the legal firms that they would hire, the content providers. Where have you seen that opportunity?
Absolutely. I want to say that the need was manifested as a result of the significant increase in terms of the number of regulations and rules, the differences between them across different jurisdictions from New York to California, the United States versus United Kingdom, just around privacy, cybersecurity, crypto, all the way to AML, BSA, and other matters. The complexity started becoming more and more evident around some of the topics we just talked about, and fintech products is given rise to a significant number of more complex regulations. And ultimately, the approach that was used, let's say 7 8 years ago, by organizations taking advantage of Microsoft Excel at the heart of the system, gathering content manually from the sources, relying on Google and scraping content from there, or relying on actual subscriptions and newsletters, and then aggregating all that, collecting it, reviewing it, determining relevance, determining which business or operational topic it maps to, what are their obligations as a result of this change, how do they take action, and how do they report on all that, was feasible, let's just say with double quotes around it, before this 300 400% uptick on an annual basis every year after year in terms of pace and volume and complexity. But now there's a couple of things that you can do to really lower that increasing cost. First and foremost is the automation in terms of collecting the regulatory changes, whether they're federal, state, independent, or international agencies. There's a great level of digitization and the ability to collect that content, normalize it, clean it up, and make it available to the user from a centralized, what we call command center, a very simple way to interact with the content with the regulatory changes across these organizations. That, of course, lowers the cost of, let's call it, fear of missing out, and the lowers the cost of unnecessary manual data collection and aggregation. And subsequent to that, this idea of finding that 20% of that content is relevant to and 80% is noise and chatter, that in and by itself can be very much, technology can come to the rescue by taking advantage of modeling and classification, rating and ranking, and business profiling on what is and is not relevant to your organization based on your charter, based on products you offer, based on your business, your jurisdiction, your assets under management, the size of the organization. So that automation also leads to great savings and scalability. And then subsequent to that, it's really the workflow. And how do you then make it so that multiple team members, including legal counsel, can contribute in that more analytical analysis of, okay, now that I have this inventory of obligations in front of me, which ones are relevant to my organization? And what is the impact on my organization? And what actions do I need to take? What gap do I need to fill? What policy do I need to change in the organization? And for that piece also, there's automation and let's call it turnkey workflow integration that allows for that seamless operation to, again, lower the cost and burden that companies typically have in managing that. And finally, many of our users refer to that this last piece as a root canal operation reporting. Who did what when? How are we doing and keeping up pace? what's going on in the organization, how many more people do I need to hire, which agencies should I follow on, which penalties are impactful of my business by regulatory agencies. Reporting has been very costly, time consuming, and error prone. And the ability to automate that collection of reports that the organization can now make sound decisions more effectively is another cost saver.
Yeah, we typically call that the two interns in the closet method that used to be used by many companies, unfortunately. So you touched on a lot of different things there. So that was a great summary. So one of the things, and I've noticed this as well, is that over the past 10 years, we've seen the different federal agencies, the different state agencies starting to consolidate on a more consistent format for the information. The actual language inside of it is sometimes exciting, but at least the structure of it has been more consistent. Is that true just in the U.S.? Is it happening in Canada, across the world? How do you see that?
Put an asterisk even on the US around it. You're absolutely right. That move is happening. But if you're talking about retrieval of statutes or administrative code or knowing the differences between California's, DBO versus another state in terms of even ones that don't allow for redistribution of the regulatory content and require licensing through a third party intermediary. So the move is happening towards that, and the Fed's been instrumental in establishing standards that others are following. OCC, CFPB, FINRA. We're seeing a lot of forward-looking movement towards that. But I would say at a federal and state level, it's we're probably 20-30% there in the U.S. In the UK, the FCA and the Bank of England and other institutions, whether they're central banks or regulatory agencies, are very much moving towards standardization from a taxonomy, terminology, and the type of attributes that are available. Canada as well, we're seeing more and more move towards that. But ultimately, we think that, as you mentioned exactly, then there would be a regional terminology and set that we don't think is going to be unified for any time soon. However, at each region, we're seeing the move towards that kind of standardization.
Excellent. And is that you mentioned taxonomy, which is a difficult concept to carry across many different industries, right? So I'll be nice overall. But the concept of a taxonomy has been something which has been kicked around for a while relative to regulations. How difficult has it been to apply those machine learning and artificial intelligence skills to those pieces?
Purpose-built models, that's really what it comes down to, is that you cannot apply the same set of models for sentencification, extracting obligations, extracting enforcement action metadata, or even determining references to rules and regulations or topic classification commonly to the same corpus of documents across different publishers. You have to very carefully look for those commonalities in terms of approach and language and terminology, and then in our case, identify a common taxonomy that is abstracted from those highly differentiated providers. But ultimately, we think this is a long-term goal of our company. We think that there is absolutely room for standardization of that taxonomy eventually. It's basically one where it's in the best interest of regulators and the regulated companies alike. Nobody benefits for lack of that kind of standard, but yes, the idea of abstracting diverse structures, being able to then use purpose-built models, or what we've called created in the form of modeling factories, so that you can have different groups of regulatory content published within different jurisdictions, but or across different regulators, and treat them similarly, and then be able to assess that similarity on a frequent basis and adjust accordingly is definitely the norm, I would say, the right practice from an AI automation perspective for these regulatory documents.
So really having those specialized capabilities that may also get you past some of those regional challenges too, I assume, in training them up on those things.
That's right. That's right. The terminology has been just across. Just think about the simplest aspect of regulatory change: the name or the type of the regulatory document that you're assessing. And we've come out with at this point 190 different official names used for regulatory change documents. So one document type, enforcement actions, has got 14 different document type references, or as you probably know, citations and the formation and the format of it. And there's blue books, as you know, for the differences in terms of citation applied at different jurisdictions by different regulators. And then mid-year change of regime, they change the notation for citations. I mean, things that you would expect not to change, all of a sudden the notation, the formation of the citation references start changing. So that's where that I mentioned the ongoing upkeep of those models. It's not enough to build it once and assume that it's going to work perpetually.
So let's flip the coin for a second. So one of the from a Castle Hill perspective, right? We're focused on what we call the business hub elements within a company, right? So the factual information about a company, what products do they sell, what regions do they serve, what all of those things about the actual company itself. We also, of course, see that there's no standardization on that side. There's no consistent taxonomy for products or for for geographic reasons or even any of those sort of things. Do you have a lot of folks who are trying to push you in that direction when they're talking to you about the content?
Absolutely, absolutely, and we do. For example, one part of what we have to do is ultimately map what you just mentioned in terms of the profile of the business to what are the applicable. And we launched this actually just this year, earlier in the first quarter. The idea of saying you operate in these states. Here's your um, asset classification. Here are the here's your charter. Here are the business products and services that you offer. And so, therefore, these are the derived um, agencies, rules and regulations, regulatory document types, topics and concepts that you should be following. And here's the inventory of rules and regulations that are the baseline for your business. And a lot of that, as you know, is incredibly transient, and companies merging and changing direction and growing into new jurisdictions or dropping a product. And that's, I think, an ongoing matter, which means that the solution needs to be able to adapt to that either growth in business, change of direction, expansion into other jurisdictions. And we've really built our solution, in our case, with that in mind, painstakingly having listened in and learning from the fact that that is a way of life rather than an exception.
We've talked a lot about we'll call it the machine side of it, right? So, but there's not really any way to get away from the interpretation of this information, right? And the whole process flow that's required from a business capability perspective for these firms. I know a lot of people are hoping that Compliance.ai or other areas are going to be a silver bullet, but I mean, how do you combat that aspect of it internally?
Yeah, it's interesting. We actually started with the premise that that's impossible. We very early on, our first patent, our first approach, white paper, was around what we called expert in the loop, and this is when the company started in 2017. The idea of the fact that you can't have a machine-only solution because at the end of the day, specifically around regulatory compliance, you cannot point to the machine and say the machine did it.
Yeah.
The decisions are up to the machine. No auditor would accept that, and no board member would put up for that either. You definitely need, in this case, specifically with the legal scrutiny and the ability, as you said, to then interpret and apply impact analysis very specific to businesses. There is a ongoing need, not only that, but also on the front end of it. What's the quality of these classifications, ratings, rankings, topic and summarizations and obligation extractions? You have to constantly be able to review and provide input, not only in the specification that was created, in the training of the models, on the ongoing product, or let's call it the content that's surfacing to the end users, and improve that on an ongoing basis. And that's really what we call by expert in the loop being the modeling aspect. So there is a very strong need, in our opinion, for legal tech from that perspective. And then on the flip side of it, what we call expert connection is to be able to then take advantage of experts that then say, now let me tell you, that's all the intelligence you need. Those are all the metadata and key attributes and classifications. But now, how does this apply to you and your business? And what's the narrative? And what's the impact specific to your organization? We think that it's very naive to think that a machine-only approach or AI approach could come anywhere close. It could be a nice, I don't want to call it tinker toy, but it could be a nice flashlight but it's definitely not the type of illumination that you would get from council.
Another thing that we have a lot of customers talking about is horizon scanning. Right, it was very popular in the cybersecurity and information security side of the world, and but we talk to more and more folks who are interested in that from a regulatory compliance perspective. Just like you mentioned, the massive increase in the percentage of regulatory documentation that's coming through, and the ability to be concerned that you've missed something, and that horizon scanning. I imagine that's another set of models that you have to apply.
That's exactly right. Another line of defense in horizon scanning is here in presence, specifically at larger organizations. And part of that, insights, trends, and where is the regulatory focus, what type of agenda is available at this point, what enforcement actions have been issued across what type of violations to which respondents, and how is that applicable to what I'm about to launch next year, and what's the risk to the organization, knowing that there's now a focus in this area by a group of regulators within that jurisdiction. So that type of trend analysis, insights, visibility, and the ability to take action based on that has become very much a must have, in our opinion, specifically for some of the larger BFSI with diverse portfolio products and services.
I know that the current focus is mostly in the financial services world, broadly described. Are you looking to move into other areas as well? Healthcare, Medicare, that side, or
Banking, financial services, and insurance (BFSI) is really our focus for obvious reasons. We find them to be the most regulated sector, most impacted from a compliance, and spending the most amount of money on the status quo of how they deal with compliance. In other words, the cost of compliance for them is high enough to warrant taking a new look, a fresh look at how they can lower that burden. That's been the focus. But as you mentioned, from a platform or technology perspective, absolutely nothing in our system would prevent us from providing healthcare.compliance.ai or energy or environment. We find that this focus that we have today is extremely valuable to our users. The fact that when they come into the product, it's BFSI, it's stuff, technology, content, notifications, concepts that are very much relevant to their business. And that type of focus, that they're not trying to find a needle in the haystack, um, interestingly has become the number one value proposition, essentially the lowering of noise and chatter, and be able to hone in on exactly what's relevant to you versus, oh, this is a service that offers everything from fish and wildlife to energy and environment, and oh, by the way, there's some financial regulations in there as well. We think that um, actually increases the amount of work that these individuals have. It's kind of like counterproductive. But there is an opportunity to offer exactly what we do today for BFSI for the other verticals. And I think that's something we will look into either through partnership with organizations that already specialize in those sectors, or with some of the organizations acting as definition partners to help us get there. But already, from an insurance perspective, whether it's healthcare insurance, automobile insurance, life insurance, there is a significant overlap. And that's why we launched into insurance last year, and we have comprehensive coverage in that area already.
one last question. So one of the currently popular items, of course, is the ESG side, the environment, sustainability, and governance pieces of it. And from our perspective, from a Castle Hill perspective, right, there's a collection of risks that are being refined in the industry across, depending upon which industry you're in. There's certainly the asset managers have their opinions about what makes up an ESG rating for a particular company from an investment perspective. But from a regulations perspective, are you seeing any motion there from any of the regulators or areas to call out things that are ESG related besides Basel and a little bit of what the OCC has done?
I think our sense is that the new administration in the US specifically, there's going to be a move towards enforcement and also rewarding organizations that pay more attention, and there's going to be regulation forthcoming. It's interesting you mentioned that. We have an upcoming event towards the end of May, and there's going to be actually a panel specifically around ESG and the impact of ESG on rules and regulations, and how are companies dealing with that. In fact, in the financial sector, and I hate to admit ignorance about it until very recently. It was like, oh wow, okay, yes, there is climate, there is the environment, and that does impact BFSI quite directly. So I think that we're going to see a rise in that, specifically with the posture of the current of the new administration in the U.S. and of course the global interest in terms of ESG becoming very much a vibrant and important matter at the organizations. We haven't necessarily seen that directly yet, but as I said, I think we're going to anticipate seeing that the rise of that in 2020, 21, and 22.
My ad hoc review is that about every 3 months we're seeing something across the world. The FCA, the Bank of England, were really putting stuff out before this, and now it's tying in with a whole bunch of other topics at the same time. It'll be a very interesting ride for the next couple of years.
I agree.
Certainly unlikely to see a decrease in the interpretation of regulation or things of that sort.
Absolutely.
Well, I really appreciate your time, Kevin. It's been great talking with you, and it's a great product, and I wish you all the success.
Thank you so much, Tim. Very nice talking to you as well. Have a fantastic day.
You too. Thank you.